Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In our last week video, we discussed that the world is having two major issues. One is rising 10-year bond yield across G7 countries, and second, rising geopolitical risk. Probably our message went to the Fed and they were in action. Last week, they have announced that they are going to increase the pace of buying long term bonds from $2 billion to $4 billion between September 9 to November 4. So now let us decode what exactly they have done. They have done booking in two legs. In the first leg, they are going to buy long-term bonds. So when Fed is going and buying long-term bonds, the yield of long-term bonds will come down. At the same time, when they are buying long-term bonds, they are going to sell short-term bonds. As a result, short-term yield will move higher. Historically, also, they have done the similar action in the past. In 1961, when John F. Kennedy was the president, at that point of time, they have done the similar action. After 2008 financial crisis, they again have to do the same kind of activity in 2011 and 2012. The entire objective of doing this, the activity was to keep the liquidity of dollars at the same level and ensuring that the Fed balance sheet stays at the same level. Now let us understand what impact it is going to have on different asset classes. Let me first start with 10-year US yield. Such kind of action cannot change the direction of 10-year yield. It can only postpone the trend. We are expecting 10-year yield to move higher as the debt level in US is rising, expecting 10-year yield to move towards 5.8 to 6% kind of a level. Rising 10-year yield will be extremely negative for US equity market as discussed in our various YouTube videos and articles. Now let us understand what impact it is going to have on dollar index. The announcement clearly confirms that the US bond market is under significant pressure. Any step taken by the Fed to reduce the yield will be a bearish step towards dollar index. If you see the chart is clearly suggesting us that dollar index is going to have a strong resistance near 99.17 kind of a level, which is 200-day moving average, and the second resistance will be at 100.50. We are expecting that dollar index is likely to move towards 96 kind of levels. Rising yield and falling dollar index are bullish sign for commodities. For silver, we are expecting it to move towards 80 dollar. That is the first target. Second target is $88 per ounce. Basically, expecting silver to move higher by 15 to 20% from the current level. As far as gold is concerned, we have been speaking about gold since it was trading at 4089. That our first target is 4600, which is almost achieved. Now we are aiming for $5100 per ounce. Now let us discuss outlook on rupee. On the positive side, SNR flows are coming, and at the same time, a lot of private banks are raising money via global funds, and at the same time, RBI is silently buying and adding the reserves. Probably this is giving us an indication that as long as geopolitical tension is there, RBI might not allow rupee to appreciate drastically. Rather, it will go and add reserves in their kitty, or probably they might go and reduce their outstanding forward. Further, on the negative side, there are factors like rising crude oil prices, rising bond yield across G7 countries, and adding to the list, if Japanese currency start appreciating, it is going to give a negative signal as far as carry trade is concerned, and it will be negative for all emerging market currencies, including rupee. As of now, rupee might continue to trade in a narrow range between 95.60 to 95.80 kind of levels. However, historical evidence suggests that whenever rupee is trading in a narrow range, probably it is giving us a signal that the storm is going to come. Once 95.80 is broken, we are moving higher towards 96.20 to 96 and a half kind of levels. For importers, we will suggest that any dip towards 95.60 to 95.70 should be taken as an opportunity to increase their hedge ratio, while for exporters, we will suggest that they can wait for higher levels of 96.20 and 96.50. With this, I will end my today's presentation. Jai Hind. Namaskar. फिर मिलेंगे next week. Thank you.